Hi everyone, and thank you for tuning in. In this video, I'm going to answer the question if Home Depot is an excellent dividend stock to buy following its 2022 third quarter earnings results. So let's take a look at those figures and answer the question. Overall, it's been steady growth at Home Depot. Revenue increased by 5.6% in the third quarter to 38.9 billion. Earnings per share of $4.24 was up by 8.2% compared to $3.92 in the same quarter the year before. Now, this is impressive considering rising costs at businesses worldwide. Inflation is soaring, wages are rising. The fact that Home Depot was able to increase earnings per share is impressive, especially it was able to increase earnings per share at 8% in the tough macroeconomic backdrop. Customer transactions were down 4.3% from last year. Fewer customers are visiting Home Depot. However, the average transaction value was up 8.8% compared to last year. Even though customers are visiting less often, they're spending more on each trip. Inventories of 25.7 billion was up from 20.5 billion in the same quarter the prior year. That's a $5.2 billion increase in inventories year over year, or in other words, that's roughly 25% increase in inventories. Let's say 10% of that value is driven by inflation. The other 15% is greater unit volume, and Home Depot has management has said that they've brought forward some of the inventories from the spring season closer to earlier to the holiday season because they were worried about the time it was going to take to get those inventories into their stores. So, in an abundance of caution, Home Depot brought forward its inventory deliveries, and so that's why it's got elevated level of inventories. This is not the same as the inventory problems going on in the rest of the retail industry, like let's say for example Target. Target's inventory trouble is because of the type of inventory it has. Home Depot doesn't have that problem. It just got more of its inventory earlier than usual. So that's why its inventory is higher. That's important for investors to understand here. Long-term debt increased by roughly $5 billion, and this might be a concern longer term as Home Depot has to refinance its debt and interest rates are higher, so it might need to pay higher interest expenses. But for now, the debt is not a concern for Home Depot stock investors. The company has sufficient cash flows and earnings to pay for its interest expenses and its debt, but longer term it could be a problem. In the 9 months ended October 30th, dividends of 5.86 billion were up from 5.26 billion, and that's good news for dividend stock investors who are interested in Home Depot stock because of the dividends it's paid. Home Depot has a solid history of increasing its dividend per share, and this is further evidence of that. So some question marks for Home Depot stock investors is the home improvement fatigue. People spent so much money on home improvement during the pandemic. Could that cause a slowdown over the next few years? That remains a question mark. The other question mark is declining home values. For the last few months, home prices have started to fall month over month. That's a big change from the rapid rises in home prices that have been happening since the pandemic onset over the last couple of years. And Home Depot management has said people spend more money on their homes when prices are rising. So when prices fall, people could spend less money on their homes. That's another question mark. That said, to answer the question in the headline, I would say Home Depot is still an excellent dividend stock to buy. The company has done an excellent job managing the pandemic. It's not an easy thing to experience a big boom in sales and then a slowdown and all of the different variables that came across during the pandemic. Management handled those changes skillfully, and that's good news for stock investors, long-term dividend stock investors, because it tells you that the company can handle various changes that might happen in the business environment. You never know what's going to happen over the next 3, 5, 7, 10 years. And the fact that Home Depot proved itself during the pandemic means you can be confident in its ability to deal with whatever might happen over the next few years. So yes, to answer the question in the headline, Home Depot is an excellent dividend stock to buy now. All right, so that's all I've got for this video. If you've gained any value from it, please hit the like and subscribe button. It'll help me make more videos like this one. Thank you for watching, and I'll see you next time. I want to thank the Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for all investors of all skill sets and risk levels. So I'm proud to partner with the Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by more than 3 times. Go to fool.com/Parkev to get your 10 stock picks now.